Good evening.
Yeah.
You guys fired up?
Let's go.
All right, cool. So, just a couple things before I get started. I will apologize ahead of time. We are behind on the playbook that Nick talks about. We're working on it. I'm refreshing the KTP as we speak. It's 90% done, but I still have to tweak it a little bit more. And Ash has pointed out a few things to me that I really need to fix on it, so that's part of the reason why. But I will tell you guys, you have to remember, you have to forgive us because we are taking time out of our schedules to do this. Okay, we appreciate any suggestions or feedback that you guys can give us at the same time, right? And you also have to remember the way we build these presentations, it's around the different types of personalities of people, right? So if you've been through Elite Academy or Inner Circles or Elite Circles, you already know what I'm talking about, right? Because not every single person in this room has the same personality, do we?
Right. No.
Right? Like, you know, our CEO is a total gung-ho, let's go, let's just get it done and figure out everything else out later, right? Then you have someone like Melissa who's very structured. Okay, it has to be done this way, this way, this way, right? Then there's somebody like me. I'm a total technical person. I have to know every little nook and cranny, every little detail, right? And there's someone like Jenny where they just love on people, right? So you have to forgive us on what it does take time to build these. It does take time to build these because we have to make it so that it relates to many different types of people. So please forgive us. It is taking us a little bit longer. Ash and I were talking about, we're trying to go for the end of the month. It might be pushed back a little bit further only because we're still on appointments, we're still recruiting, we're still out in the field. So please forgive us. But tonight, my talk, yes, is about product because you guys know that is one of my strongest points in the business. And by the way, the numbers don't lie, right? Nick was just talking about being on that MD call. You have to remember, I'm representing us, and I'm very proud to represent this team, right? And I'm going to do my best to have that representation be one of the next SMDs coming out of that next wave of leadership, right? And for some of you guys that aren't MD yet, I will tell you, you guys are totally missing out. Because what G was talking about on that call was specific and to the point, right? And like a lot of us, we know what we're supposed to do to get to SMD, but he literally put a laser focus on what we have to get done. And even for some of us, he talked about how simple it is. It's getting to your ring. It's $8,333.33 a month that you have to make. That's it. In a rolling 12 months, you have your ring. He was very specific, and he told us a few other things which I'm not going to share because you had to be on the call. But it's a privilege to be on there and to be known that, okay, I'm doing enough to get noticed. Now let's see how far I can really take it, right? Because also I think about where my position is in the business. I'm the end of 4 exchange legs as well. And Nick's talked about the story multiple different times. So imagine being part of an entire legacy and keeping it going. Right? And by the way, yes, my cousin, the one that recruited me, quit. You know what I mean? And some of you guys, the person that recruited you in the business quit.
Yep.
Think of it, right? But now in our business, what we do for the families, that's the difference we make, right? So I'm going to talk about the FFI rule specifically and the Transamerica term because that's what we're going to pay the most on, correct?
Yes.
So, turn this on first, that would probably help. All right, so little quote. A good man leaves an inheritance to his children's children, and the wealth of the sinner is stored up in the hands of the righteous. So what that says, it is biblical, right? For some of you guys that are very faith-based. You're not just preparing for one generation, you got to be preparing for at least 2 to 3. Right? So think about, and this is even from your own perspective. And I look at this too, it's like, okay, am I saving enough money and do I have enough life insurance coverage? Right? Like at this point in time, if something ever happened, my wife has enough income for at least until my son is in college. If you really look at it. Right? But I'm like, that's not enough. Like literally, that's not enough. I'm like, how much more money do I have to save to make sure that my son is going to be taken care of? If that makes sense. Not just my wife, but my son carrying on beyond my wife too, right? So, a couple of things that you guys want to read. If you haven't read any of these books, I highly suggest you do, right? We've talked about these before. Tax Free Retirement and Retirement Miracle by Patrick Kelly. Money, Wealth, and Life Insurance. By the way, that book has an example of how much money banks have in life insurance. And we're not just talking about like $1 or $2 billion. No, we're talking about anywhere between 15 to almost $75 billion in life insurance assets. By the way, that is considered a tier 1 asset to a bank. And also shows how strong a bank is. Right, so if you want that book, let me know. I have it in PDF, I can send it to you. Tony Robbins, obviously, Money Mastering the Game and Unshakable. Those are two great books. Money Mastering the Game took me about almost 3 months to read. It's like 700 pages. But he literally interviews the 50 wealthiest people, right? And you've heard the saying, success leaves clues. He interviews the 50 wealthiest people and asks them what they did with their money, how they grow their assets, how they build their net worth. And then Unshakable basically puts the whole entire formula together in one book, which is really cool. So if you haven't read either of them, I suggest you do get them. One of my other favorite books, T. Harv Eker, Secrets of the Millionaire Mind, How to Think Like a Millionaire. You know, I was listening to Ed Milet's podcast. He says that an average person will have, what is it, almost 41,000 thoughts a day.
75,000.
75,000,
Yeah.
right, 75,000. And 91% of them are recycled every single day. So most people are living the same life over and over and over and over again because they haven't changed the way they think. Think about that. Now, the reason why a millionaire is a millionaire or a decamillionaire or a trillionaire is because they think differently. That other 9% is what makes them wealthy, right? And then the last one, millionaire next door. And by the way, guys, there are people out there that are millionaires next door. I have one client that you guys heard me talk about. I did a $500,000 rollover. She's got $1 million in stocks with Home Depot. She's literally a millionaire next door, and you wouldn't even think of it. Wow, it's crazy, right? And they are out there. Her and her husband, house is paid off. Husband works a full-time job as a manager. She works at a school district. I got her through one of the para-appointment studies. Pretty cool, right? But I highly recommend a lot of these. Now, there are a lot of other books that I could recommend, but I think these are a good foundation to start with. It's just the basics, and then taking it to just a little bit of a higher level, and then learning different ways you can explain this to people, right? So now, you guys heard me talk about this the other day, is you are a fiduciary carrying that life insurance license. It is your responsibility to talk to everyone about life insurance. Because guess what? Everybody's gonna frickin' die. I haven't met one immortal person yet. That's what I'll say. Right? So guess what? Everybody can become your client. Right? And some people say, oh, I can be self-insured and all this other stuff. But for what, when you can leverage an insurance company for a lot less money? Right? And then we'll have a talk about different things, but that's a long-term care talk, but that'll be for a different day. Right? But you have a license to go change people's lives. Every single day. By the way, it's okay to add a few $1 million to their legacy. Because that's exactly what you can do with that life insurance license.
Don't talk to them, it's probably not going to happen.
Right? Now, by the way, that life insurance license will pay you a lot of freaking money too. Whether on your personal pen or building a brokerage. Both. Right? So,
Matt.
the main things we're going to talk about, go ahead, Missy.
Spelled fiduciary wrong.
That's the S.
Well, we did it to Ash, so we're gonna do it to you.
Right? Okay, so today we're mainly, like I said, we're gonna talk about term and FFIUL. Okay? Now you have to make sure you understand this presentation differences in life insurance, because by the way, guys, whole life and universal life still does exist. Okay, there are still companies, by the way, some of the companies we do business with, they still offer whole life and universal life. Even Everest, it's a whole life policy. Nationwide offers universal life, but we're not going to talk about that, but you have to understand how it works so you can explain to the client so that you can sell them on why they should move that money inside the cash value of their UL or whole life into an FFIUL, right? Which I'm going to talk about a little bit here. So differences in life insurance. There's 3 different types. There's term. So here's the thing about term. It's like how I like to explain it. It's like renting a house. You live in that house for 10, 15, 20, 25, 30 years. At the end of your lease period, what happens to your rent? Goes up, right? Then you have a choice. It's either you stay in there and you pay more in rent, or hopefully you requalify and get into another house or another life insurance policy. Now there are benefits. You can get a lot of coverage for very little money, and it's great for short-term needs. And like I said before, it's inexpensive up front. And you guys will see what I mean when I actually show you illustrations. And I'll explain to you guys how I sell the illustration and why you do combo cases or full total care package, because it's going to keep your client long term, right? Disadvantages. After term expires, rates increase dramatically, potentially uninsurable, like renting a home. 97% of people outlive their policy. How many of you guys know somebody that's outlived their term policy? And if you haven't been out in the field enough. I'll tell you that right now. I've probably run into at least 40 families where somebody's outlived their term life insurance. By the way, guys, term life insurance is dirt cheap. And when I actually show you guys how cheap and how inexpensive it can be for a client, it'll make total sense. And also do something you can point out when you're sitting down with a client. By the way, there are many different types of term policies. One of the main ones we offer has living benefits. That is automatically going to pique their interest. And they're like, wait, what do you mean living benefits? Because most people think of life insurance as, okay, I have to die to take advantage of the life insurance policy. In our case, because we're the greatest marketing company there is when it comes to financial services, all these companies make products based on the market we sit down with, right? Hence why the FFIUL came into existence, okay? Next one, whole life, universal life. It is a form of permanent life insurance, which is good. It's like owning the home, but there are a few challenges, okay? And remember, when you're speaking to a client, it's about your verbiage on how you speak to them. Try not to say problems, because then people think of it very badly. Think there are a few challenges with it, right? There's no cash accumulation for the first 5 years. Because most of them are sold back in the 70s and 80s as, hey, buy this policy, you have access to cash value in the future. They just don't tell them they can't access the cash in the first 5 years. Does that make sense? Okay. Next part, rate of return is fixed, 2 to 5%. By the way, that is based on how well the insurance company does, not how well a market index does. I've run into very few where there's an actual reflection of the market, and that's, I think I can still count on hand maybe 4 out of all the years I've been out in the field. Okay. Now, they say you can borrow against the policy, which is true, but at a very high rate, 6 to 8%. Notice that's more than what a family will earn in interest over time. Withdrawals can be delayed up to 6 months. And here's the thing that a lot of people don't know, and I'm going to explain this to you guys in detail too. Death benefit only, no cash value. How a typical universal life or whole life policy is set up, it's set up as a level death benefit, or in some cases option 1 or option A. Okay, so when you're out in the field and you see a whole life or universal life policy, make sure you look at the death benefit. It'll either say level, option 1, option A. So that means, let's just say if I'm sitting down with Swanson and he has, say, a $400,000 whole life policy and he's got, say, 200 grand in cash value, which I've seen before, right? Something happens to Swanson, it's set up as a level death benefit. God forbid, knock on wood, his family only gets the 400,000 he's covered for, not the 400,000 and the 200,000. That's a level death benefit. Okay, and half the time most people don't even know or was never explained. Okay, and remember, it's your job as the advisor, as the agent, to explain this in detail. Okay, you have to remember that you want to be trustworthy for them to do business with you. That's why when you bring a ton of value, that's why you make a lot of money as compensation for helping the family. Does that make sense?
Yes.
Okay, now, the IUL, permanent life insurance, perfect. No lapse guarantee. So that means that there is a very bare minimum that someone has to put in to at least keep the life insurance policy in force based on their age for up to 20 years. Okay, the cash value won't grow very much because they're barely putting in the bare minimum just to keep the policy alive. Does that make sense? And sometimes you will run into that as an agent. I just had one of my clients text me the other day. He's like, hey, what's the bare minimum I can put in my policy? I just lost my job. The good thing is I've been having to overfund his policy for the past 2 years, so he doesn't really have to sweat it, but he's like, I still want to make sure I'm making contributions. I said, okay, this is what you're putting in now, this is your bare minimum. He's like, all right, change it to the bare minimum, I should be good maybe in 2 to 3 months, and then we'll get back up to putting back in $300 a month. Right, so that's more of a safety feature for you guys to help prevent you getting a chargeback. Right? Cash accumulates immediately. So from the very first day someone puts in their first premium, they're already going to earn interest. It's not like whole life and universal life where they have to wait 2 to 5 years. Because on whole life and universal life, they're paying a majority of that in the cost of insurance. Right? Average rate of return has been about 8 to 10% over the past 25 years. That's the other part that's holding me up is I'm waiting for the new Transamerica Performance Index to come out so that I can put that on the new KTP. That's basically what I'm waiting for too, right? Tax-free access through policy loans and fees. You guys have to remember when you explain this to the client, they're not taking a withdrawal. They have to take a loan. That's how it stays tax-free based on the IRS laws for accessing the money inside of a life insurance policy, right? And how many of you guys understand how it works when someone starts taking loans from it?
Not me. How many does not know?
How many do not know?
Oh, do not know.
Okay, so let me explain it to you guys. So same example, let's say Swanson, 400 grand, he's got 200 grand in the cash value, correct? Okay, what the insurance company does first is they're going to pay back his cost basis, what he's put in first. Does that, you guys follow?
Yes.
Then when they actually start touching the policy value, right, because technically his death benefit right now would be 600,000, right? But if he starts taking loans from the policy, let's just say he's taking, say, 100 grand from the policy, since he's basically his own bank and he's taking it as a loan, the insurance company is not liable for it, basically. That's why if something happens to him after he's taken out 100,000 in benefits, that's the reason why his death benefit is only 500 grand now. It just lowers the total overall death benefit. Do you guys follow? So even if somebody's covered for, say, $1 million, and they got, say, $1.5 million in cash value, their total death benefit at that point is 2.5, but if they start taking loans, it lowers the death benefit little by little. Do you guys follow?
Yep.
So that's how you explain it to the client. They're like, wait, so you're telling me, even though I put in all this money, I'm gonna get all my money back, plus interest, plus the cash value, plus the death benefit? Yes. Right? It's an advantage for us. Now, also too, withdrawals can happen within 72 hours. They're not delayed. By the way, I've done 5 loans on clients in the past, probably about a year and a half. And I've seen the money just come out, whoop, and a check sent to the client, right? But the main reason why it's so beneficial, beneficiaries receive both the death benefit and cash value, like I was mentioning before. Something happens to Swanson, family gets 600 grand. Follow? Okay. Now, let's talk about some specifics. It is permanent life insurance. Face amounts as low as $25,000. So you get someone who says, I just want the permanent life insurance, I really don't care about the cash. You can go as low as 25 grand up to 99,999 without doing labs. By the way, I'm just going to throw this out there because Nick and I were having this discussion the other day, is when you get someone that's going to do something like this, you cannot do an express app. Do a full application. You cannot do an express app because an express app requires lab work. Since it's simplified underwriting non-med, that's the reason why you have to do a full application. Does that make sense?
Yeah.
I'm going to talk about the term 2 here in a couple minutes to go along with it and why you don't have to do 2 sets of lab works. Ability to grow cash value inside the policy, tax deferred, and access the money 100% tax free. So how I like describing it, it's like 401k on steroids. Money grows tax deferred, but you access it 100% tax free. Go ahead, Ash.
On the second point, I don't know if it's still true or not, but you can't put them at a preferred rating. They have to be at a standard too, right?
It has to be a
Right.
standard rating.
Yeah.
You're correct.
I was like, if maybe
Yeah, it has to be
change
standard.
It's still the same.
Now, if the client wants a better rating to get
Then
like
they
say
have to do
preferred or
that.
preferred elite, they do have to do lab work, even if it's under 100 grand. Okay? Now, also too, clients can also qualify for wellness credit. So this was explained to Ash earlier, is if you have a client that regularly sees their doctor on an annual basis and they're always in good health, they earn what they call wellness credit. So that will help them qualify for a better rating. So like, if I'm sitting down with Fareed and Fareed says, okay, Matt, I see the doctor every, say, 6 months. I'm always in good health. You know, I don't try not to eat too much food down in Rosarito, right? All the tacos and the mariscos and everything, right?
I would be
My
lying.
cholesterol's good. Okay, then lab work and her medical records would prove that. So guess what? Because she gets a better rating, lower cost of insurance, more money going to the cash value, right? Your job is to undersell and over-deliver. And that's one of the first things that stuck out in my mind when I was out in the field with Nick. I've been out in the field with Nick. Actually, I think it's all been with Nick, except for my cousin. But just learning how to undersell and then over-deliver on the policy. So imagine if I'm sitting down with Fareed, but then she tells me, you know, I have had a few things in my medical history. Okay, let's just do you standard, just to cover both of our butts, right? And then let's just say she comes back preferred elite, then that's great for me to call her and say, hey, Fareed, just letting you know your policy is approved, and I have even better news, you got at the preferred elite rating, which means it's the best rating you can have. So that means you pay less in cost of insurance and more money goes to your cash value. That also gives me leverage to tell her, hey, you should probably think about saving more money or even going for more coverage if I see there's a fit for more coverage, right? Because she got such a great rating. Like that's one little shift that I think I'm doing differently than a lot of other people. Because just imagine, what if I called you, what if you were my client saying, Anthony, hey man, just letting you know you got preferredly, you got the best rating. I think we should talk about maybe you saving more money or getting more coverage. Which you think is better in mind right now? And if he says, well, you know what, more coverage will actually sound good. Guess what, you get a bigger target, bigger second advance. Is there anything wrong with giving him more coverage, saving more money, and you getting a bigger advance? No. By the way, because he's impressed with you doing that, he'll probably give you more referrals. Right? Also, too, great for external 1035 exchange. So if you run into a client with a whole life or universal life policy with cash value and they are outside their surrender period, this is a great time to actually bring up an IUL. Because you can show them, hey, if you took, say, this 20,000 Swanson and we put into this IUL where you have a higher cap on your earnings, right? Because you'd like to earn more interest on your money, wouldn't you?
Definitely.
Why only earn upwards of 5% when you can earn up to 15? And if it doesn't cost you that much more, maybe 20, 30 bucks, maybe 50 bucks, maybe 100 bucks more, wouldn't it be worth it to get a higher interest rate? Right? Now also too, if you've had clients on the books for a few years, like for me, I have a lot of clients on GIUL 1, GIUL 2, right? I can actually go back and do an internal 1035 exchange, right? We were just talking about this a couple weeks ago, where we can give them more coverage. By the way, it has to go up by at least 25%, so that means their premium has to go up by at least 25%. They exchange their cash value to the new policy. Yes, it does start a whole new surrender, but imagine instead of, back when I got started, what was the GIUL 2 only gave what, 12%, if I remember right?
Yeah, 13.
Yeah, it's 13% now, but imagine we can give them 15%, right? And if you want to add long-term care or living benefits now, the chronic or critical illness, you can. By the way, new points, 100% advance, because it is an internal exchange. So you won't get the 40/60, 100% upon delivery, which is really cool. So if you've had clients on the books for a few years, you might want to look at it, especially if they've been overfunding their policy, right?
One question.
Yes,
When you do that, do they do it to the new age now?
yes.
Yes.
But here's the thing, they would keep their rating, which is the good thing. So if they, like, I was using Farida as an example, if she had preferred elite beforehand, they would keep that.
She's
They would
not
just
gonna be
base it off
lower
of her
again?
age, yeah. They would just base it off of her age and the coverage amount, right? These are the little things that I'm trying to teach you guys that I'm doing out in the field that helps with your persistency, but also too, to help you get more clientele at the same time, right?
And also if their 1035 had some money in the old account, it helps in building up the interest on that.
Yep.
new
Compound
account.
interest.
Mhm.
Do we have to go over Rule 72 again? No, right? So imagine if the client starts out with 20 grand in the cash value versus just $200 a month,
$200 a month, yeah, huge
right?
difference.
Would you rather have 20 grand earning 8 to 10% or $200 a month growing at 8 to 10%? Does that make sense? Now, a few things. By the way, this is just scratching the surface, guys, okay? What an IUL can be used for, of course, the death benefit, supplemental retirement income, because that's how we sell it, right? College funding, so like if you have kids or even your own policy, you overfund your own personal policy, and you take a loan against that to help put your kids through school, right? Wealth accumulation, wealth preservation, wealth transfer, estate planning, business planning, and then the long-term care living benefits.
Yep.
This is just scratching the surface. Like, guys, this right here in the business planning side, that's five different types of policies within an IUL of how it can be classified. You guys are like, wait, what? I can use it for more than just the death benefit? Yeah. There's a lot of advantages, right? Even the estate planning, if you run into somebody very high net worth, very wealthy, and you have an estate planning attorney that you can refer them to, that estate planning attorney is going to make you a lot of money. And when you guys can come talk to me about that a little bit afterwards, a little bit higher law, but there's a lot of money to be made in estate planning if you work with the right attorney too at the same time, right? Now, how we sell it, it's on supplemental retirement income, right? So the tax problem, there are 3 phases to a qualified plan, right? So there's a contribution phase, the accumulation phase, the distribution. The contribution phase is your tax deduction. So if somebody's saving $250 a month into their, say, IRA or 401k, over 12 months, that's $3,000. By the way, guys, most people are under the impression that full $3,000 is a full tax write-off for them. It's not. It's based on their tax bracket.
Yeah.
So if they're at a 30% tax bracket, that's $900 that they're deducting on their taxes. Over the next 30 years, that's 27 grand. Now, let's be honest, $900 is not going to change your tax bracket in California. Let's be honest, right? Now, during the accumulation phase, the taxes are being deferred, right? So let's assume, because there are companies out there that claim that they can get 12 to 14% in a few of their investment products, which we know is false, right? We're not going to name any names. They know who they are. But let's just say they're getting 12% rate of return for the next 30 years. That's $882,000. Let's just call it 900 grand. Now, here's a challenge with qualified plans like 401ks and IRAs. When they actually start to take income, this is where they run into the tax problem. Now the money's fully taxable. So if they have 900 grand, they take 6% per year in income. That's 54 grand a year. By the way, what haven't they done?
Tax.
Okay, best case scenario, let's just say they stay at a 30% tax bracket. That's 16 grand a year over the next 25 years, because that's the average length of somebody being in retirement, right? $405,000 paid back in taxes. Just because you decide you want to save $900 a year. How about them apples? So whose retirement are you really funding, yours or the government's? And even with the government shut down, all these people talk about, oh, I got a secure job with the government. Right.
Yeah, don't hold your breath.
Right? So you get someone that's really stuck on their 401k, use this. Right? Or what I like to do, I like to ask the $1 million question. If you have $1 million in your 401k, how much of that is really yours? That hurts to say, you know, for somebody to answer like, I don't know. What do you mean you don't know? But you've been putting your money into it? How does that make any sense at all? By the way, that money inside your 401k is counted toward your estate. If you don't have it properly planned, your family's lucky if they even walk away with 20% of that money. Imagine $1 million estate, and you walk away with only 20% that you've worked 30 to 40 to 50 years to build, and you're only gonna leave 200 grand of that million? Are you freaking kidding me? How is that even smart financially?
You're better off playing the lotto.
Seriously. Or during a rainy day like this with thunderstorms, you might as well just hold a lightning rod like this, right? You have a better chance of getting struck by lightning. Now, how you sell it. This is the reason why you overfund. This shows a 35-year-old male, $400,000 death benefit starting at $500 a month, $600 a month, $700, $800. By the way, guys, you always want to tier it. Because you do this, you keep the client locked in long term because they're like, okay, I'm really investing money. So I show it run out to 67 because that's when Social Security, you know, you're supposed to have access to it. Imagine someone's only put in 290 grand at a 7.75% return, 816 grand. Tax free. That's equivalent to probably somebody having about 1.5, 1.6 in a 401k. If they can prevent losses from the market. Total death benefit, $1.2 million, 100% tax free.
Matt,
Yes.
just a comment. So here you're saying that at 67, they have access. They actually have access to 62. However, 67 is like where you'll get the max.
Yeah, the maximum amount.
So if you change that, I'm just curious, if you change that to 62, what would that be?
Well, you'd end right there. So between here and here, it'd probably be, I would take a guess, probably about maybe 690, maybe 7, maybe, right? But just imagine if I'm sitting down with Chris, hey Chris, who do you know that's got 800 grand tax-free in a retirement account right now? Do you know anybody? Would you like to be the first?
Absolutely.
Okay, so what I need from you is I need your driver's license, social security number, and your bank account info. Can you get that for me? All right.
How much you put down on that?
290
290.
total. 290 total. And they're gonna give back 1.2 if something were to happen. Okay, tell me what other investment out there.
Was that your question? How much money?
No.
they
How
put
much
in?
you put a month at age 35? How
It's
much?
So 500,
6,000
500, 600, 700, 800.
Okay.
I tier it. Okay,
Per
when you're
month.
out in the field, you'll see this, right? Now, let's talk about term really quick, and I'll show you because we're gonna wrap up here in about the next 10 minutes. There are 2 different types of term life insurance policies we offer. There's a Trendsetter Super and the Trendsetter LB. Trendsetter Super has no living benefits. Okay, there is simplified underwriting under 100 grand. Anything above 100 grand is fully underwritten. They need to have lab work done. Yes?
Can you ever change that? Can they ever change the Trendsetter Super to a term LB?
Yes. It's a conversion.
Conversion.
Yeah. But you might as well, if they're looking at, if they like the LB, you might as well just write an LB. For some people, they're like, I just want term life insurance. Okay, just
No,
give.
for someone that doesn't qualify for a Trendsetter LB, that's all I was asking.
Oh, if they don't qualify for an LB?
Yeah.
If they didn't qualify for an LB, they won't
not gonna
qualify for the regular one.
Yeah.
Not now, but in the future when they're healthier. Yeah.
Yeah,
conversion.
just remember, everything's on their MIB.
The
so.
only time I've done a Trendsetter Super was a hard-headed Primerica client who wanted apples for apples. So I gave him what he wanted.
Yeah, and you will run into that,
Versus an
guys.
LB, you mean?
Yeah.
Yeah.
Oh.
They didn't want to get fancy or anything. They just
Yeah.
wanted.
They
Well, I
just-
did the IUL with living benefit, because the IUL has living benefit now without LTC, so then I did extra coverage, and the super was just a lot cheaper
Yeah.
than the LB, so I ended up
You can
doing a
supplement
super,
it.
but I had an IUL
Oh,
with
that's
living
cool.
benefit
That is
too.
cool.
And I'm actually
So if
gonna
you
talk about that
are,
too.
yeah, so if you're doing full care package kind of a thing, you don't have to do an LB and a IUL with LTC,
Yep.
or, I mean, you know, or a IUL with living benefit if you already, you know.
Yeah, exactly.
Oh, that is so good to know,
Yeah.
thank you.
And I'll actually talk about that too. Then you have the Trendsetter LB minimum face is 250. Always remember that. It's always minimum 250. Now here's the thing, guys. I'm going to tell you there is a conversion that you can do to an IUL. If you go from Trendsetter LB to an FFIUL, they'll already include the chronic, critical, and terminal automatically. Okay. But now if they want LTC, they have to get underwritten for the LTC. Okay, that also includes a Trendsetter Super. If they want it with the living benefits, they have to get underwritten for it. Just full transparency. Okay? Because some people are like, well, can we get it with the living benefits? Yes, if you go the living benefit route at the very beginning. Does that make sense? By the way, guys, that's how you can sell more policies with the intent to convert to an IUL. That's how you can get them too. Go ahead, Ash.
A couple of mistakes I made. Some of you already know. I just want to share the mistakes, right?
That's how we learn.
Did not know that there was a 17-year-old, like one of the daughters, I was going to get him a term. You can't sell term to under 18. So I didn't know that. If you did not, don't try to sell term to people who are under 18. And second, you cannot sell an IUL with LTC under 18 as well.
Yep.
Correct.
Yes, so those are two mistakes. I did end up like making the sale, but the thing was like I had to like really reel back everything what I said because
I remember when you were working on that case.
right, and it was the same client. Then now the client turned 18. Then we're gonna go ahead and now 1035 their policy into with an LTC.
Yep.
Those were like two mistakes. I think it didn't happen. So if you didn't know, just want to like add it on.
What'd you tell your client?
When at that time.
Yeah.
So right now she
When you
only
realized
qualifies
the
for
mistake.
terminal illness rider.
Yep.
That's what I told her.
Yeah.
Yeah, good.
Which was the right thing. Yeah, like,
Yeah.
But when she turns 18,
Oh, yeah,
which is
you
in
go
2
back.
years,
Yep.
we'll convert that into full long-term
Yeah.
care rider.
All right,
Cool.
now, let me show you how cost-effective a term LB can be. Same client, 35 years old, $400,000 in coverage. A 10-year policy could be as little as 21 bucks a month or 50 bucks a month. Or as little as how I've been talking about it, as little as $539 a day, or $539 a week, or $1251 a week. That's like, don't go out and have lunch one day out of the week.
To protect
To literally protect your family. Like imagine just breaking it down for a client, they're like, oh yeah, I can afford that, if you break it down like that, right?
This is what age?
35.
35.
Yeah, so my age. Yeah, actually, I got 9 days, right? I'm excited to have a lot of you guys over at my house on next Saturday too.
Yeah.
We're gonna have some fun, right? All right, so now, this is nuts and bolts. Perm versus term. So same client, 35 years old, IUL for 400 grand, $299 a month. That's the target premium. Okay? So that's $35.88 a year or $107,640 over the next 30 years. Total cash value is $209,453. Total death benefit after 30 years is $609. Not a bad deal, right? A term, same thing. We were just showing this earlier. $600 a year, 18 grand over the next 30 years, no cash value. Okay? No death benefit after 30 years. So now this client's 65. Now let's really break it down. Okay? By the way, you run into another insurance agent that believes in the whole term, buy term, invest the difference, do this on them. Show me what it would look like for the first 30 years, and then now that the client's 65, you can only do the next 20 years. Because they are 65, they don't qualify for anything more than 20 years of term coverage. Right? Next 20 years, client does not add one more penny to their IUL till they're 85. Cash value 751 grand. Total death benefit 1.1 million. Okay. If the client reapplies in a term and is insurable, because what happens to our health as we get older? New premium, same amount of coverage, 470 bucks, almost 6 grand a year, or 112 grand over the next 20 years. Still only have a $400,000 death benefit. If the client lives past 85 and they decline continuing coverage, look how much they put in, 130 versus 107. So it's actually cheaper to own an IUL over term. By the way, numbers don't lie. right? So if you ain't run anybody from like the other practice company and says buy term, invest the difference, Joe, okay, run me an illustration. Let's go.
Can you take that page specifically and put it on WeChat?
That would be great.
Yes, I
Oh,
can.
no,
Would you guys like that in the WeChat?
Yes.
Yeah.
Okay,
that
by the way,
specifically, yeah.
you guys should learn how to do this too, because if you run into those kind of
Yeah,
agents,
you can show that.
you can show this.
You can burn the termites.
Yep, exactly.
All of it.
Now, let's kind of look at everything. Let's recap, right? So, at age 65, the client's put in, so based on the schedule I was showing you earlier, 65, 280 grand in, is already covered for 708. That's the cash value, sorry. And the death benefit now is 101. This basically falls off. They're basically self-insured now. So they were covered for 800 grand, all the way up until they were, well, actually up to here, it'd actually be 1.5, but the term falls off. They're basically self-insured.
And it's still got $1 million in coverage.
Yep.
And they got 700 in cash.
Yep. And imagine, and by the way, guys, this isn't run without the LTC. There's living benefits, which is cool, right? Now, as we wrap up, because I'm hungry, right? By the way, we're going to Sports Nuts. Okay.
Yay.
So target premium of $35.88 in the IUL, term LP $600 a year. Training associate, how many training associates are in here? Okay, Johan.
Yeah.
How many hours do you need to work to make $1,000 at your job?
Like a month. Yeah, that's my
Okay,
check.
can you imagine, okay, I'm gonna point this out. Can you imagine sitting down with one client, okay, imagine, guys, get this. Okay, imagine sitting down with one client, 45 minutes in and out, you've made over $1,000 to replace your income at your job.
And then
Why are you
get
still at
lazy.
your job?
And then you
Right?
get lazy.
So, but here's my point. If you're trained, wherever you're at, just take this number, right, together. One family week for a month is anywhere between 5 grand to 13 grand. Imagine a training associate, you can make 5 grand in a month. You guys realize most families don't even make that in a month?
Yeah. I would
Working
say
at a job?
more than-
Really?
You make more in a day than people make in a month, you guys, if you really just started working.
By the way, guys, we haven't even talked about annuities yet. That's a whole nother ball game, which you guys are gonna see in a couple weeks.
I know.
How much money you can make in
And
annuities.
if you need the information sooner, get with your trainer, get with your SMD, but we'll be going a full training on it.
Yeah, because here's the thing, guys, is what you do for the clientele out there is a noble purpose. Don't let anyone down talk to you about, oh, it's one of those things, it doesn't work, blah, blah, blah. Okay, really? So what does your job do for people? Are you adding hundreds of thousands, if not millions of dollars into someone's future? Are you gonna make sure someone retires comfortably at your job? Hell, are you gonna retire comfortably at your job?
Huh.
Are you protecting widows and orphans?
That's right.
You know, can you make sure that your kids go to college if something were to happen to you?
How about
Right.
just be
It's
able
like-
to eat, be able to
it's like,
live in their own
You know,
home?
do you wanna eat dog food when you retire? Do you? No? Okay,
Hey, some
so
people
let's
like
take care of
I
it.
don't know how crazy I'll get by the time I retire.
Yeah. But here, you guys wanna scare people?
that. It's edible.
You guys wanna scare people? Ask them, okay, how much do you make at your job? Okay? Okay, if you need 20 years of income, okay, multiply what you're making at your job annually times 20 years, that's how much money you have saved. You say that right off the bat, say, oh, no, I don't need to, okay, here we go. Now at 65, that's how much you need to have, let's just say it's $1 million. That means by the time you're 40, you should have at least 200 to 300 grand saved. Minimum. I'm looking at that and I'm like, I still don't have enough saved. That's why I'm trying to like save as much money as I can. Like Nick proposed
People are living longer too.
yeah, Nick gave me a challenge. He's like, dude, I challenge you to save 25 grand in 2019 cash. As I'm gonna do you one better. My goal is to save 50. Imagine my goal is to make 150 grand cash this year, 1099 in WFG, and I'm gonna save a third of that. I mean, how financially
Get a drink.
secure would you feel having 50 grand in the bank cash? By the way, how many people you know that always say, I have a financial emergency because they don't have money saved?
GoFundMe.
Yeah, like, I can't remember the last time my wife and I had a financial emergency.
The more money you have saved, emergencies don't seem to come up. It's weird. It's always when you don't have the money that something that
Yeah.
costs money
That's why
comes
it's an
up.
emergency.
Yeah, like my wife was saying the other day, she's like, I think we're gonna need a new fridge soon. I'm like, okay, well, what's the big deal?
Let's go
Like,
get one, yeah.
we got the cash, you wanna put it on a credit card, then pay it off because you got the cash rewards, by all means, go for it,
That's smart.
right? Proves a credit score, right? I was making the joke in the most, who was I telling? I think I was telling Eddie. I was like, all these people got like first world problems. I was telling this to Missy too. All these people got first world problems. I'm like, dude, I'm just trying to catch up to my wife's credit score. That's all I'm trying to do, man.
It's called
You
marrying
know, people
up.
make all these excuses, they
married
got
up?
all these problems, they got all these challenges, and I'm just like, I listen to some of this crap and I'm just like, if you were making more money, you wouldn't complain about half the stuff you complain about on Facebook,
Right.
or on Instagram, or on this, or on that.
Mhm.
Not just like what Nick was talking about. You know, when you're in WFG, you see a lot more complainers. Yeah, you will. And guess what? You can talk to them about the business. If they're not gonna do it, if they're not gonna join you, who cares?
You realize too that even just just showing the associate, all you gotta do is recruit 3 people and make them all clients. In 30 days, you'll be doing 1,600
So if you suck
per
at
client.
producing.
That's
Okay,
another,
let me-
almost
here.
$2,500 more a month.
You look at it, it's 30,
Per client, or
like,
per-
there should be no reason why you shouldn't have a certain type of conviction and passion when you're out across the kitchen table. Like when someone tells me no, I'm good, it frustrates the crap out of me. Like, what do you mean you're good?
Well, you look at this and just go, okay, so if this is the numbers, then now you know exactly what, if you need to go make, let's say you're like, man, I need 10 grand like this month. You know exactly what you gotta go do. You know, and there's power in that, you guys. Like, you realize, like, you can't go work at frickin' the mall or wherever and go, what, you know, go to your job tomorrow morning. What do I gotta do to make 10 grand this month?
They're like,
You-
"Well,
no,
I don't
no,
make
half
10
of
grand."
that of you.
The manager's gonna say, I don't even make 10 grand. And then you're gonna tell them, what are you doing Saturday morning at 9 a.m.? 10 a.m.
Right?
By the
We're
way,
gonna-
your license
You know
is
what I
good
mean?
24 hours a day.
You're fired.
I'm gonna give you guys one little tidbit. I'll share with you guys what was said. And it's something on the MD call that I was kind of joking with Nick earlier. It's all about that premium life. That's all it is. If you can figure out how much premium you need to write every single month to pay all your bills and live the lifestyle you want to live, You got it.
36,000 points a month.
you've got it made.
$5 to $10 for every dollar a client saves, you guys.
Seriously, guys,
If you got
it's all about that
if you got a
premium life.
$500 car payment, if you got a $500 car payment, you realize that all that really is, just do the math, you know, just do the math.
125.
That's a $100 IUL. If you're an associate, it's a $100 IUL.
Yep.
And that pays your $500 car payment.
Right? Now, here's the thing, guys. I'm going to remind you guys. The trainers that come up here, we put a lot of time in preparing this for you guys. So, you know, if there's anything you guys can give us feedback on that what we could do better, please let us know. Right? And also, too, we do appreciate compliments because, you know, we're taking a couple hours out of our day to prep stuff like
You're
this.
so cute.
Well prepared, dude. Great
Hey,
presentation.
you know,
No, it was.
you know,
Do your
for
kind of
if the way I look at it, you know, when we were up front, it was a privilege to do GT because we had so many S&Ds in the office, right?
Yep.
And up here, you know, it's still a privilege to be in front of you guys because, you know, each of us have our strengths in different areas, right? And we just
Yep.
want to give you guys maximum value at every single BPM. And now let's make sure we can fill that room on Saturday. Imagine if everybody just brought
And
one
now
guest.
use it.
Yeah.
Use the knowledge.
Use the knowledge. Help a family, make your family some money. But now here's the thing. If everybody brought one guest for Saturday, imagine what we could do with all that. Right? So with that being said,
We're gonna do we're gonna
Accountability.
do
Yeah.
base shop. I wanna do my base shop in my
Okay.
office.
Real quick, do you want to do accountability from, because I have the chart right here, if anybody?
We're
wanna
gonna do it in my
accountability?
office
Okay.
with my base.
Okay.
Yeah, so with that being said, thank you so much, guys. Appreciate you guys.
You're in my base shop in my office.